Monday, December 13th, and I can hear jingle bells just around the corner. And I know somebody who's already dancing to Santa Claus elves. Omar Najia, our Monday morning quarterback, global head of derivatives at BB Energy. I'm hoping we're going to see him strutting on a nice beach in Phuket this morning. Omar, kick us off. While you're away, the oil markets are on a tear. We're seeing Brent crude trading up again this morning, heading for that $80 handle.
Yeah, I think basically, market is rising. I'm no longer basically a fan of crude. I think the other markets will continue to rally, but I think, crude at the moment, I think, I think markets are basically driven by sentiment. And right now you're having this kind of, if you go back to a couple of Fridays ago, you had this big sell-off when everybody got spooked. So when sentiment, when you had fear in the markets because of this Omicron, and then what you've had since then is a kind of a relief kind of thing. Things aren't that bad. All this kind of up and the market has basically come back. But I still point to the fact that price candle did, I think, a lot of damage to crude and its structure. It certainly flattened the curve a lot. It took a lot of air out of sales and all the rest of it. So I'm not convinced that basically we're going to go and set new highs. I think that's the least probable thing. I think basically most probably is what we're seeing now, which is basically a corrective rise, where you're going to see people say, well, it's getting better and all this kind of stuff, blah, blah, blah. And then there's going to be another sell-off. I don't think I don't believe that markets are driven, at least trend-wise. For the short term, sure, anything can happen. But trend-wise, I don't think they're driven by viruses and all that kind of stuff. But I do think that we've seen a top in the crude for now. I think people are a bit complacent about high prices. You talk to people that say, yeah, OPEC will do this and OPEC will do that. And again, I'm not a believer that OPEC can do very much except what they've already said they would do. So I expect we take a little bit higher, no new highs, and then we come off. I think for a long period of time. So I'm not bullish oil. Equities, okay. Yes, but not bullish oil.
Okay. Last comments for the year 2021. Omar Najia is not bullish oil. I can see the headlines already flashing on Bloomberg. Albert Stromquist, principal at Landstrom Advisors. Your insights on China may guide us as to how bullish one can be about oil in 2022. We saw last week on Friday the Chinese government wrapping up its the sort of annual Central Economic Work Conference, where they mentioned, I believe, the word stability 25 times in a 4,000-word decree statement afterwards, and a commitment to try and front load support to the economy at the beginning of next year. What's your outlook, takeaway from that meeting, and your outlook for China going forward?
Look, stability, Sean, and good morning, by the way. Stability is the buzzword, right? And has been for eons now in China. It's the hallmark of the party. There's a strong movement now led by the president Xi Jinping as well, and in his philosophy to balance the playing field between wealth and poverty. He's lifted the people out of poverty, but there's still a large gap. So the concept of socialism with Chinese characteristics is going to increasingly dominate the economic equation in China. Looking forward into 2022, I think we can count on 4 to 5% annual GDP growth and the corresponding growth in crude oil imports that would carry with it. But I don't think that China is going to have the impact in 2022-23 that it's had in the last decade, right, on moving the oil markets. that kind of, in a nutshell, is my answer to your first question.
I mean, from the point of view of the statement, the meeting last week, there was a particular reference to the real estate issue. Houses are for living in, not speculating. What guidance would that sort of, how should we take away from that, how they're likely to manage the big challenge of Evergrande and the real estate sector?
Again, that's a policy, that's an economic policy dynamic driven by socialism with Chinese characteristics. Evergrande becomes the proxy for this entire debate. And it seems increasingly that the government is going to allow Evergrande to wind up, right? Rather than stepping in and saving the company. But there seems to be consensus of what I'm reading here, a view that domestic stakeholders are going to receive a level of protection. The domestic stakeholders are buyers of unfinished off-plan properties, suppliers, labor, and bankers in the supply chain. And those groups will be protected, but with a haircut. The other large segment, the other major segment would be the offshore bondholders. There's $20 billion more or less in US denominated bonds held offshore. And there seems to be no interest in protecting those bondholders. So I think your own headline this morning on your news windup was that the bondholders are looking at a long-term resolution to their situation.
Which let's go to Ahmed Mehdi, Research Associate, the Oxford Institute for Energy Studies, one of our resident experts on all things OPEC and Iraq especially. Let's kick off firstly with Iraq, Ahmed, as it is in the news, and we are at the end of the year. I'd ask you to sort of give us two thoughts, a reflection on the year that Iraq has had, and as we end the year with the headlines that Halliburton and Exxon are in talks for a stake in Iraqi oil field. Your thoughts on where Iraq is right now?
Good morning, Sean. I would say that there's a few things that have been happening. So on the political side, obviously, there's a bit of a pause right now as the government formation process takes root in the country. Some reflections on the elections. I mean, despite a new rollout of an electoral law, there's still some reservations about how much reform actually this new process has created. So actually, there's and also a lot of the kind of backroom negotiations are ongoing at the moment with the various parties. I don't think it was necessarily true that the Iranian, I mean, some of the media suggests that the Iranian-backed parties were put on the back burner, and this has, geopolitical implications. I think at the end of the day, these are all tactics of extracting political concessions, and that's why you saw this ramp up in the security issues in recent weeks with the assassination attempts, drone attacks, US concerns about the green zone. On the energy sector specifically, I think the big takeaways this year have been about really the power sector, in particular the lower than expected Iranian gas flows and electricity exports to Iraq. And that's not necessarily just driven by disputes over debt payments, but also by what's happening in the Iranian energy sector as well, with more liquid switching, their own water stress, their own issues relating to power demand. And I think that this is kind of put and also we've seen record liquids burning in Iraq this year as well. In terms of upstream,
I'm quite keen on the upstream piece, Ahmed. Just
upstream piece. Yeah,
so on like upstream over piece, the year, a kind of you would, from a sort of casual observer, seems like all the big oil producers want to get out of Iraq. Is that a misreading of the situation? What's not working there for them?
There is a lot of
for Halliburton, for example.
So I think the positioning of the IOCs has been very interesting this year. West Qurna 1 is a good. I mean, a lot of drama happening there this year. With, I mean, really, actually, that was going on from 2020. Effectively, Exxon's Iraq chief had really, there was a corporate repositioning of Exxon's assets as well. So this is not just about Iraq, but it's really a non-core to them. They submitted their letters towards the end of last year. Then there was a lot of dispute around actually what does it mean about an IOC who leaves a technical service contract? What are the legalities and the issues? Initially, they wanted to transfer the service contract to their Chinese partners, who are also in West Kurnawan. It was rejected by the Iraqis. They then, behind closed doors, the Iraqis were speaking to several American companies. A lot of them weren't interested, but this whole issue about Halliburton, I think there's a lot of confusion about this, because I think there's a difference between some of the big players like Schlumberger, Halliburton, and others. They already are contractors at these fields, with their oil field service contracts. Now, in my view, I mean, this is just my view, I don't think that this is a reality or this is likely to happen, that Halliburton, I mean, don't quote me on this, but I don't see that happening, largely because the financing structure behind this project is being done via a special purpose acquisition vehicle. There's a lot of opacity behind it. And actually, in any case, it is there is still arbitration proceedings going on between Exxon and Basra Oil Company.
Yeah, it's interesting. We had James McCallum on last Thursday, and one of the comments he made amongst many in terms of outlook for the year ahead was that the oil majors may drift back behind to the back seat and let other smaller actors, second tier oil producers, be at the front and with their brand on oil exploration and production.
Well, I mean, you have to also place this against the backdrop of Total Energies, right? So, who have made a mega investment in the country, but that has to also be peppered with some, reservations about, how that. And right now they're being extremely quiet because government formation process going on. But if you look at that deal, what was it? It was effectively a revised version of the old Exxon deal that was put together over a decade ago, with some green elements, but also the capex intensity is much lower. It's more manageable. But fundamentally, I don't buy the idea that you're going to see this huge exodus. It's just a lot of it's to do with repositioning. And even for BP, just several weeks ago, they held the big event in Baghdad around the development of this new Basra Energy company. That's not an exit. That's just it's to do with cost of capital, restructuring business lines, and more importantly, it's to do with financing. Because I think really,
Right.
So this idea that you see small minnow players, no, it's in my view not necessarily.
Well, these are the biggest oil fields in the world, and so hence they're quite important. Omar, looking out to the sort of coming new year, I'd welcome your reflections a little bit on the surprises of the year that just finishing. We've seen that liquidity has been very generous from the Fed and other central bankers. It looks like it's going to continue. Why will that not continue to prop up the oil market as it has in the last year going into the new year?
Well, I think it is, and it has. But I like to look at, instead of like taking like little snapshots, I like to look at oil as a kind of continuing kind of story. So you had extreme bearishness, then you had basically the market move up to $70, $80, and then you had everybody come in and start saying, 200, and here we go, and all the rest of it. Now that we dropped the $10 and we came back, you still from where we were, $40, $30 to 70, 75 basis TI, that's massive. But you still have people right now going in and saying, right, the Fed's going to do this, equities are going to rise, let's be long oil, et cetera, et cetera. And I think basically the idea is somehow flawed. You need to get into the market when everybody is telling you it is completely and utterly shit and it's going to zero. And when we are at 72 and people are saying it's not going to be that bad and this is going to happen and this is going to happen, I don't buy it. So I'm looking basically. So the reason is not, that the Fed won't do something, because I think they have no alternative except putting more and more and more money into, more debt, whichever way you want to view it. But I think you need to have a flush of all this basically length that's in the market. You need to have it dump. You need to have it come off substantially. I think over time, the West needs massively higher oil prices to make green at all competitive, and to basically hurt, where demand is actually, incremental demand is coming from, which is the East. So they want substantially higher prices, and which is why you're seeing, Germany not okay, Nord Stream 2. So I think they're going to get that. But before that, to have real money come into the market, you have to have oil become cheap. I mean, really cheap, like a no-brainer kind of cheap, when everybody tells you that's it, blah, blah. So right now, I don't think is the right time. I think basically you need to have that substantial correction. You need to have everybody who's going in now and buying and saying maybe and whatever be proven completely wrong, get smashed to the downside. Then you get basically money comes in and makes this market fly. So it's only a question of timing. Over time, 2 years, 3 years, yes, we're going higher, but you can never make money like that. Those are like, blue sky ideas. Short term. Right now, my gut tells me, people are being suckered in, and they're going to be basically smashed hard. That's my gut feeling. So let's see what happens.
Albert, one of the big stories of 2021 has been the sort of rising narrative of a Cold War between China and the US, China and the West, if you like. We had the G7 meeting this weekend, in which they were, the main focus was kind of trying to find alignment on the long-term challenge of China emerging as the world's second largest economy and more robust geopolitical actor. My question is, from you sitting in China at the end of 21, does that seem like it was a big story for 2021? Does it feel like it will resonate further? How does a story like that sit, looking at it from Beijing, from China's perspective?
Well, I have a lot of opinions on this question. I'm really kind of at pains to share all of them here on an internet.
Of course, yeah.
But
just generally, rather than your own opinion, just from the China coverage, would they give the G7 meeting a lot of coverage? Do they care?
Look, it's not a squirrel. It's real. It's real. China's been made it very clear here that they have expansionist ambitions. Right? This has been the course of China's history here since the 1950s. And clearly there are one or two targets within that expansionist objective, right, that create a big stress point, particularly for Western democracies when they look at the potential consequences. And there's clearly serious intent on China's side to prosecute that strategy at the nearest opportunity. If they wait too long, then the defensive and offensive capabilities of other players will grow as well, right? And potentially either meet them or backfoot them. So sooner than later would be the expectation. But given the kind of the deepening economic ties now between China and the US in particular, especially on energy exports from the US to China, right? There have been several large deals here consummated in the past couple of months that in effect creates its own stress point on China's ambitions and their ability to execute. So I think this is everyone's keeping a very close watch on this dynamic, and no one wants to be surprised.
From a sort of China point of view, and from the year in review, if you like, does it feel like it was one of the biggest stories of the year, or is that just a sort of Western obsessed perspective?
Well, China itself has made it a big story. China is very quick to react to any suggestion of criticism of its ambitions. So it is a big story here. There is a drum beating domestically to incite nativism and nationalism, right? To support the whatever route China may wish to take. So it's not the West looking kind of with excessive concern at China's stated ambitions. It's happening right here at home. I mean, you can feel the tension rising.
It'll be interesting to see as we run into the Olympics what bumps in the road come into that corridor. I think there may be a few still to play out. Let's go to the survey question and just get the room's view, which sort of touches a little bit on this topic, but maybe slightly tangential to the earlier point we were discussing with Albert. The Communist Party reiterated on Friday that housing is for living in, not for speculation. That was in their end of their 3-day annual Central Economic Work Conference statement. My question is, do you expect the Chinese government to bail out the real estate sector? Yes or no? A month ago, you might have said yes. Now, would you say yes still? It feels a little bit different. And we thought a few months ago that such a thing nearly made the US stock market collapse. Today, it's not necessarily even getting on the headline. So it's kind of an interesting story to keep an eye on. Ahmed, looking to the year ahead, we have Saudi Arabia announcing its budgets for 22. It's forecasting a budget surplus for the first time in many, many years. $24 billion surplus in 2022. One would expect that that would be based on an expectation that oil prices will be chunky, up towards an average of 70 on Brent. Your thoughts on the Saudi budget forecast and what it tells us about where OPEC will go in 22?
Easy question.
Yeah.
So a few things. So firstly, I think that just taking the budget, yeah, absolutely. I think what's interesting is that some aspects of it are different in terms of spending patterns. Trying to moderate spending on public, civil service. And now actually the surplus is more going to be on enhancing reserves. So obviously there's some aspects to long-term planning. I think in terms of expectations, OPEC strategy more generally, on the demand side, I think that of course, you've got, as Omar said, this Omicron, it's obviously we saw profit taking and sort of removed some of the speculative froth in the market, flat the forward curve, the curve flattened a little bit. But in terms of demand, actually, I think there's going to be a winter of discontent, as they say, Q1 with the gas to liquid switching, that TTF Brent spread as well blowing out a little bit. More importantly, you see refinery margins have come under a little bit of pressure, but nevertheless, the cost for refiners who effectively have to deal with the cost of gas prices, either in Europe you might see some run cuts, but generally speaking, that liquid switching will take place, and that has been estimated to be around about 500-600 kbd. So Q1 demand actually is going to obviously soften a bit. Q4 will remain quite strong, and already we're seeing the Chinese.
Q4 21, you mean?
Q4 21, so we'll end the year with Q4 21 demand looking quite strong. Even the Chinese, they'll probably want to use up some of their quotas. But as we go into the first quarter of next year, that will soften significantly. And I think the issue for next year is where we see it will be a year of different quarters. So we'll see the spare capacity issue becoming more serious. I think with
or the absence of it.
Exactly. And that will zoom in a little bit more, because really, apart from Saudi and UAE, Russia has reached its max. Iraq, yes, it does have some swing fields, but export infrastructure is there are reasons why they have to limit that. Other countries, Kuwait is having some upstream challenges, and obviously we've got Libya with the elections. There's a very strong chance of some volatility there. So certainly, I think spare capacity, geopolitical and climate-related, outages could put prices much higher. But as we go into Q3, Q4, it's all going to be dependent on Iran. That will be really important to those Q3, Q4 balances, which is why OPEC have, this issue of the 3-month flexibility in their supply program is so important. It's in terms of both on the demand side, but there is, now growing questions as to whether they may lose control because of if there's a surprise to the demand side, if Iran doesn't come back, on that side. So really, we're going to start looking
it's kind of a price forecast or a budget forecast from the Saudis that sort of indicates to me a little bit that they're not so confident on Iranian oil or shale oil coming back in any significant volumes to put downward pressure on that average price.
Demand is coming back. Demand is coming back next year. I think the issue is that it's not, the budget is not going to be based upon wild cards like that. I think that when they're doing generally when you're looking at the issues to watch, yes, the US, I don't think anyone is questioning the fact that the US growth will come back next year. DUC count is very low, reinvestment rates, WTI above 70, these factors, most credible suggestions are now 800 to 1 million of growth next year.
In US production.
Yeah, because we mustn't just look at the public announcement.
Yeah, of course.
We have to look at the private players as well. But on Iran, just very quickly, I think that even if there isn't if there isn't a deal, then I think that's where even if there isn't a deal because of some issues, we could see more leakage. There's still the issue of the stress on the storage, and the most interesting news, I think, which I think I'm not sure if it was covered in this show, is about this US delegation in the UAE this week talking about potentially tightening even further sanctions on
well, we have today the first time the Israeli Prime Minister visiting the UAE, which is kind of historic on so many other levels. But let's just go to Omar on the road, so to speak. Omar, just quickly, your thoughts. 2022, it's your last time with the show this year before we take a month break. What do you think 2022? What's the thing to watch out for? What will you be watching out for?
So I think basically Iran does a deal. I don't think that affects the market that much because they're already selling so much oil, so it affects a little bit. But I think the main thing will be politically, it'll show weakness of the US and the EU basically. So I expect that to happen, but I don't think it'll be major for oil, but major for political implications basically. And then, Saudi Arabia budget, blah, 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 they're always wrong. They're wrong about everything all the time, continuously. So whatever they say in terms of, surplus and deficit, whatever, I'm pretty sure it's going to be disastrous. But in terms of oil price, demand and all the rest of it, demand has been coming back since people said back in February or March or whatever it was, or April, that, it's never going to come back. So it's already done. Most of the heavy lifting is done. Question is, where does the market go from now? And I'm not 100%, but I'm getting there, that I think 2022 is going to surprise in the same way as 21 surprised people to the upside, and impossible and no way and all this kind of stuff. I'm getting this big feeling that maybe 70%, 80%, that the oil market is going to surprise people to the downside in 2022 and not to the upside.
So you're shorting on your holidays. Albert, you get the last word this morning. Let's get the survey result first.
Well,
do you expect Chinese government bail out real estate sector? 2-1, yes. From your comments earlier, I would say not so much.
Well, that I actually had to answer this no, but it's actually not a binary question.
Yes, you're right.
It's going to be a hybrid result.
Right.
That will
the word of the year, hybrid, I suppose.
Hybrid. It will impart some kind of a government-backed bailout, but with consequences, right, for the real estate industry. And on the energy side, Sean, look, it's going to be very important to follow China's program here in 2022 of regas expansion, right? They're currently close to 100 million tons per year of regas expansion, and they plan to double that in the next 5 years. Right? So you should see significant movement in 2022 on the installation of those projects. Right? Then the question is, where will that gas come from? Right? Does the world have that much capacity uncontracted at this point to serve that additional regasification capacity in China? Because China is moving away from coal, right? Despite the kind of the short-term.
Despite the increase in it, they're moving away from it.
Well, they did that to answer a power shortage, right?
Right.
Blackout. So they moved back into coal, but their long-term plan here is to move progressively away from coal and more into LNG, right? And pipeline gas as well. But the pipelines are pretty well saturated now. There's one more coming on stream in 2022 from Central Asia. And at that point, they'll have all the pipeline gas currently on the books, right? So LNG becomes the solution, right?
Right.
It's the and that's going to have a big impact on LNG markets as well, if demand outstrips supply.
Well, let's wrap it up there from China. I would recommend everybody, if it takes a chance, opportunity to read the statement that came out of the meeting last week of the Central Economic Work Conference. We'll post it on our Twitter feed. It gives a good insight as to the thinking and direction for China in the new year, which of course is very relevant to the direction of the energy market, still is. Also, for a mark your calendar, we will have our 12th UAE Energy Forum on January 12th in NYU Abu Dhabi. Always a good gathering to get the pulse on the outlook for the year ahead. If you're in town, if you're around, please join us. You're all welcome. New York University on January 12th for a day of sort of crystal ball reading for the year ahead. But meanwhile, let me thank Omar Najee, of course, our anchor every Monday. It wouldn't be the same without you, Omar. Thank you so much for being with us all year, and look forward to you coming back in January. Ahmed Mahdi as well. Always great to have your insights. And Albert joining us in the year from China. Really lovely to see you again and to have your voice at this table. Really valuable. I always considered your insights when you were with us here in the UAE to be one of the most precise and valuable. And it's great to have them back. So thank you, Albert, for joining us. All the best, everybody. We'll catch up the rest of the days this week, 10:30 every morning, and wrap up for the season on Thursday. Thank you.
Happy holidays to everyone, Sean.
Thank you, Albert. Happy holidays to you.
Bye-bye.
Bye-bye. Bye.